Several years ago, we read a lot of news headlines suggesting that Shanghai, Shenzhen were becoming viable rivals to Hong Kong in the IPO race or in the financial center race. That raised concern about the economic status of Hong Kong being overshadowed by these cities. But nowadays, we notice that the governments, the stock market operators, have been working very hard to develop the infrastructure, the financial services, and the cross-border supervisions to support the economic development. The focus has shifted to complementarity rather than competitions among these cities. So in this panel discussions, our experts will share their views about the growth synergy from these integrations between Hong Kong and these mainland cities. And they will also explore some factors that will create a new synergy from the integrations. So Lyndon, with the first questions to you. Your association represents more than 160 members, I think representing from both buy side and sell side. So before asking your view, can you brief us more about your association, the mission and the values?
Sure, thank you very much, Peggy, and thanks to SCMP for inviting me onto the stage with my esteemed panelists. So I represent the equities division within ASIFMA. ASIFMA stands for Asia Securities Industry and Financial Markets Association. We're the largest trade association representing global banks and global asset managers and several regional banks as well, focusing on Asia Pacific. We intermediate the discussions between banks and asset managers with regulators and exchanges across the region. Put simply, we're lobbyists. I hate the term lobbyists, but we're an advocacy association. We build broad industry consensus, and we serve as advisors to regulators around the region about how to attract greater capital, greater amounts of capital to this region. So that's kind of what we do. And as I said, I run the equities vertical, so from IPOs, capital markets, sales and trading, all the way through the post-trade space across all of Asia Pacific. I also run the horizontal at ASIFMA. We have a China Capital Markets Committee. And through that committee, it's kind of a senior governance body. It's cross-asset class. This year, we're launching a new capital markets white paper for China. That will come later on this month. And we also have our own conference, our own China Capital Markets Conference next Tuesday in Hong Kong. It's the first time we're doing this in 3 years. So, sorry for the plug. All right. Back to my notes. So with respect to what we see, China's really emerging. I know there's so much negative headlines. I open the paper every day and I see bleak scenario for China. Loan growth slowing down from 10.3 to 9.7 this past month. Blah 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 blah. There's a lot of negative news. As the earlier panel commented, very encouraging to see at least some human interaction now with Blinken visiting China. For ourselves, we just hosted a closed-door session with CSRC, the China securities regulator, who was in town this past weekend. We had over 30 members in participation, active participation in this closed-door session. We accompanied our board to Beijing just a couple weeks ago, meeting with all the regulators, including the new NFRA. And the common theme is doors are open, very, very constructive. The market will continue to open. And I don't know, I'm from the finance field. I think today we have kind of a cross-section across multiple industries, so maybe it might be helpful to take some time just to explain how global investors access the China market. So you have the traditional QFII channel, which has been around for 20 years. And that's kind of your common channel into an emerging market. You need to apply for an ID. Initially you had quotas, a lot of restrictions with respect to what you can invest in and how to get your money out. So it wasn't really until Hong Kong emerged with the Hong Kong China Stock Connect scheme with both Shanghai and Shenzhen that the door really started to open. right? And it's by reducing the frictions of trading and investing into China for global investors, making it more similar to how they operate in other markets, that MSCI finally in 2018 started to include China A shares into its emerging markets index series, okay? And then the race was on, right? So, within a couple years, you saw foreign investor share of China A share triple, and it now hovers around 4 to 5% of China A shares are now owned by foreign investors. This is at a what's known as a 20% inclusion factor. So there's huge potential. So the market recognizes that there are still some impediments, even with the more user-friendly Stock Connect channel, that makes it more difficult for investors to invest. And so there's a 20% inclusion factor. But as China continues to open up its market, making it easier, there's a huge potential going ahead for China. So maybe I'll pause there.
Thank you.
Thank you.
Rocky, as the think tank of the Hong Kong, so the Financial Services Development Council has been monitoring the integration between Hong Kong and the mainland cities. So can you share with us, can these integrations be facilitated through the collaboration, the regulatory collaborations, and
Sure.
how?
Thank you. Thank you very much, SAMP, for having me. The FSDC is not only monitoring, but we are also advocating for some changes in the connectivity. I think that going forward, there are a lot of synergies between Hong Kong, Shenzhen, Shenzhen and Shanghai. We also have the purpose of developing our country as a more liberalized economy, and I think Hong Kong has a very important role to play. To this end, I think we should look at how Hong Kong has been functioning in the past and what we should be doing going forward. The right thing to do is obviously for us to liberalize our connect schemes with Shenzhen and Shanghai, but how we can do it better is really very important. So to us, we do believe that Hong Kong has been serving the role as the capital formation center for a lot of companies from the mainland. However, going forward, there are the other part or the other side of the elements that we should also take care of, and that is for us to provide the platform for mainland Chinese companies to invest in the other parts of the world. And therefore, I think what we have seen in the past year is really conducive to the development. So we can see that now companies with headquarters not based on the mainland, but also the other countries can be included in the southbound stock exchange. And I think this is conducive to the development to the extent that now the southbound liquidity can be investing in such companies, and that is very important. And we also believe that it is necessary for us to provide more financing channels for companies of all sizes. And therefore, what we have seen in the 18A, 18C, absolutely important, and obviously the Financial Service Development Council has been advocating for such policies too. But to us, there is an element of how SMEs are, or smaller and medium enterprises are very important to not only the Hong Kong economy but also the mainland Chinese economy, and therefore we should also find ways to facilitate their financing needs. What we can do is perhaps look to the success of our connect schemes. That is for us to not only deal with our liquidity within our market, but also connect that with the liquidity in the other places. And you can take a look at how the mainland Chinese liquidity and also the foreign liquidity is boosting the market, not only on the Hong Kong side, but also on the mainland markets. And therefore, I think for the smaller and medium enterprises, if we can include them in some of those connects, or perhaps establish a new connect schemes that facilitate the exchange, would be very important.
Thank you. So, Catherine, what is your take?
I think Lyndon and Rocky have talked a lot about the infrastructure that the Hong Kong government, together with the mainland counterparts, have put in place, platforms, etc. I think those efforts are to be applauded, especially with what FSDC has been doing for a long time. I do like to point out, I mean, as a veteran financier myself, I have a background in investment banking for 20 years, and I'm now doing venture capital in Israel. Just visited Saudi and have a background of doing business in the Middle East. I think we have an issue in Hong Kong today, which is the fact that despite the infrastructure that's there is a lack of capital flow coming from US, which represents the biggest and the deepest pool of capital in the world. So in times before, IPOs are always anchored by the biggest US institutional investors, the Fidelities of the world, the Wellingtons, et cetera, et cetera. But of late, as far as I've checked with my banking friends, the IPOs in Hong Kong have lacked US money. There is no US money coming in, or Europe for that matter. There are some hedge fund money from the US, but not much. And so, look, we're caught in the geopolitics of it all, but I do think that we need to be really proactive in finding other sources of capital coming into Hong Kong if we were to call Hong Kong the international financial center and not just the financial center for China. And to that point, I think that while it is a long game, the Middle East is actually very important, and the moment is now. The Middle East represents a very vast region. It's, you know, it's Qatar, it's UAE, it's Kuwait, it's Saudi, et cetera, et cetera. They are different. They are similar, but they are also different. And there's a lot of competition that goes on between them. I do think these visits by our CE, our financial secretary, are very, very important. But I also think that without the necessary follow-up work, relationship with the Middle East will take a long time, in the same way that when we do business, we people from Hong Kong with our mainland counterparts, it's a lot of time to be spent with each other, relationship building, trust building. And so I think the Hong Kong government, if I may say so, needs to have very urgently a Middle East strategy. I don't think the Middle East would actually replace the US in terms of the depth and the breadth of capital. It won't. But without doing so, I think Hong Kong does have an issue, despite all the infrastructure that's been put in place. So I do think that that's a very important thing. And the Middle East doesn't give you the money. They are into partnerships. So look at what BioSteel has done in Saudi. They are building a plant in Saudi where they are funding half of it, and the PIF is only funding 25%. And look at how ADIA has participated in Hong Kong. I was involved in a deal where ADIA has bought a group of hotels, including Grand Hyatt and Renaissance Harbourview from the Chang family. It's a 50-50. They do not want you to go there and actually look for money and then, ask for money and then they'll give it to you. It doesn't work that way. And so I do think that there needs to be an immediate recognition of that mindset, an immediate putting action into place as to how you would not only open up an office in Dubai, but really rapidly getting people into those countries and working on the relationship to build that sort of trust. And so there is capital flow both ways.
But in your opinion, how does Hong Kong become the platform that navigates Chinese companies to invest into these Middle Eastern countries, or the other way around, to attract them to come to Hong Kong and China?
We are English speaking, most of us, and we actually are quite stable in terms of our infrastructure, and one of the complaints of the Middle East counterparts is when they deal directly with mainland China, the officials change once every so many years. And so when they've built the trust and the relationship, they don't know who else to talk to once the person's no longer taking that position. So I do think with our professionalism, our approach, our English-speaking ability, the way that we've done business, we're open to the world, we've done business with many, many international counterparts. I think there is quite a bit that we have an advantage on in terms of people from Hong Kong who can actually be that bridge at this moment in time.
And Rocky, do you agree? Do you think that Middle East is an alternative opportunity for Hong Kong?
I not only agree, but I believe that it is not only an alternative, but also an additional source of income. So we can't forego what we have deep root in, and that is really to attract the European and American and like North American monies, but also the Middle East is very important. And we observe what Catherine has just mentioned, and through our exercise with our counterparts in the Middle East too. It's not that it's for us to ask for the money, but also to be involved in a partnership to develop research programs, to think about what we can possibly do together. And this is actually something that the FSDC is working on right now. We have identified some counterparts in the Middle East, and we believe that it is not, necessary for us to not only wave the flag from afar, that is from Hong Kong, but also be there and try to understand the culture and the investment behavior and the relationship, and also the opportunities, not only on that side, but also to tell the story of how Hong Kong could be playing a conduit or a connector role for them to take part in the opportunities in this part of the world.
So, Lyndon, how about your associations? Have your members show interest in the Middle East opportunities?
I think it's early stage. I echo everything that my fellow panelists just said. We recently organized a webinar with the Saudi Exchange and had close to 200 members participate in that webinar. So there's clearly interest, but it might be early stage. But I would agree that it's a different world now, right? We can't just have all of our hopes anchored on U.S. investors. Our traditional model is to help U.S. and European investors invest inbound into Asia Pacific. And that trend continues, but we're also seeing, kind of diversification. We're seeing more interest by some of the regional banks, regional managers for other parts of Asia Pacific and the Middle East. These are markets in transition, and I wouldn't be, to my comments earlier, wouldn't be so negative that it's kind of the end of U.S. investing in China. I would say right now at this particular point in time, perhaps some of the data points that you've been getting is that China launched a new overseas listing regime, which went into effect at the end of March. And it is thorny. It is very complicated. Okay, I don't want to bore you with banker details, but to suffice it to say, all of our bank members, including John and his team, we're trying to figure out how to continue to launch deals within this new regulatory regime. So it's a transition period. It's a difficult period, but I'm confident we'll get through it.
And to sort of modify what I also shared a moment ago, I do think that as people in finance, when things are quote unquote cheap enough, right, they're always takers. So, it depends on valuation, it depends on sort of the ability of these fund managers from the US to make their own calls. And I think as long as there's no so-called the semblance of a capital control, right, from the US government, right, the pension money, the institutional money, those could continue to look at opportunities if things get cheap enough. And, so it's capitalistic in that sense. But I do think that we're at a bit of a hiatus at this moment in time, but I think we're hopeful because I think we are trying everything we can, whether in the private sector or in the public sector, to do what we can to make it better.
Yes.
Yeah, sure.
If I can just add, absolutely, and that's the message from the mainland authorities, right? We've been going to Beijing and Shanghai quite often, and the consistent refrain, whether you're talking to the regulators, the exchanges, it's no more this competition between Shanghai and Hong Kong. That's really receded into the background, right? The mainland is saying, we support you. Hong Kong, please stand. Please, amplify the two systems because we really need you as an IFC. So, they really don't want to interfere. Why does China crack down so much on cryptocurrencies on the mainland? But at the same time, they say, Hong Kong, go have a ball. They want Hong Kong to grow up. They want Hong Kong to be capitalistic, right, to be free. So that's the message that we're hearing from the mainland, okay? But now it's up to Hong Kong. Stop oh, there's an overlord, what do they think? What do they say? Be yourself. Be the IFC that you've been for decades.
And speaking sort of from the perspective of the Chamber of Listed Company in Hong Kong, I had the opportunity to be there when the FS has opened up the consultation sessions to different sort of constituents of society. And you notice with this government, right, they really acknowledge that the government are policymakers, but they don't know the market. And they want market participants from all aspects to give them advice and ideas. And they listen and they study and they try to implement, right? So if you look at that, I mean, this is a step forward because it's a government where, you know, they're willing to listen in all aspects and try to move and make it happen. And they put together KPIs for the different departments to measure how much of what they've tried to, say that they would do can actually get done. So there is a lot of hope in that sense, but I also think that for us all, people in different sectors, right, it is our moment to speak up. If we think that there are things that can be done better, whatever they may be, find a channel to tell the government, because that's where Hong Kong would come together and be strong.
Yeah, that's a good sign. So we all understand that the sovereign funds in the Middle Eastern countries have plenty of capital to deploy. So apart from Hong Kong and China, there are other countries also want to attract their capitals. So what is our need? I'm thinking will the financial connectivity, such as in the GBA, can be a comparative advantage, and making it a destination to draw them here. Rocky, what do you think?
Sure. So the difference between Hong Kong and the other Greater Bay Area cities is that, Helen in the earlier panel has already mentioned that we have freer access to information from the other countries and regions. And therefore, I think the data availability in Hong Kong would be substantiated from how it is available in the other GBA cities. And therefore, if we can play a role as the connector of such data, I think we can serve the purpose of a lot of foreign investors. Now, going back to the macroeconomic side of things, for the mainland Chinese economy to be the second largest and representing 18% of the global GDP versus that of the US at around 24-25%, we are still a smaller economy, but then we are growing at a more rapid pace, and therefore. Hong Kong and the mainland Chinese economies are really too big to be ignored by global investors. And therefore, they will want to look into the investment opportunities on the mainland. And Hong Kong, with our data availability, would be one way to connect the dots. The other thing that the earlier panel has also alluded to was our emphasis on the green and sustainable finance and perhaps sustainability in general. Now, Hong Kong has already got a core climate as our voluntary carbon market, and that is really to complement how the compulsory carbon market on the mainland would be important to the development going forward. And given that Hong Kong's capital market is free of capital control, that is, again, a little bit different from how it is being rolled out on the mainland. And therefore, perhaps that would also be another point to connect the dots for foreign investors and connecting them to mainland potential investment opportunities.
The Middle East look at things from a very big picture perspective. So they look at growth, they look at access, and there are a few growth verticals that cuts across these Middle East countries in a very big way. So healthcare, innovation, mobility, and believe it or not, gaming. Gaming is very big in that part of the world. So I do think that if you look at what China is very good at innovating, healthcare, mobility, and gaming. Those are aspects that actually you can see collaboration. There's also the aspect of soft power, right? So when we were there, we saw the Ministry of Culture, and they're very, very keen in how to collaborate with Hong Kong to bring arts and culture together. And Hong Kong has a lot of those assets, whether it's the Philharmonic, whether it's the golf club, whether it's opera, whether it's, there's a lot of them. So if there are ways to actually connect in very simple, right, have the Philharmonic play in Riyadh, go visit the Middle East, do that sort of a thing and let the soft power play itself out. I think that also would speak to sort of what we're good at.
Yeah, and I agree with all of the above. And I want to reference a comment that I think Dr. Yan made from the first panel with respect to GBA, and Helen mentioned it as well. The free flow of people, clearly their frictions still remain. Free flow of capital, which is a bit sticky, right? Hong Kong, free, no capital controls, but China there is. So how do you do that? And then free flow of data, as you mentioned, huge sensitivities around cross-border data flow. That's one of the reasons why IPOs are stuck in the mud, because working papers need to be retained onshore. So they're very thorny issues to resolve, but I'm confident now with the borders open, the government really very close with their ear to the ground, listening for feedback. I'm sure that there could be practical solutions to these issues to really amplify the power of GBA. But I also want to say, with respect to Hong Kong, me too. I was born in Taiwan. I spent 10 years of my career in Taiwan, 10 years in Shanghai. This is my second stint in Hong Kong. I also noticed that the degree of English usage has gone down significantly in Hong Kong. Before too, as long as I speak Putonghua or I speak English, I could easily get by, and there's no discrimination, and everything's fine. But my wife is now here in Hong Kong. This is our second stint, and she's like, she feels like she has pressure to say, "I'm from Taiwan. I'm from Taiwan." So, I mean, to be a welcoming international financial center, you really need to embrace the dominant language in the two largest global economies, the U.S. and China. So we need to shift away from the tribal mindset and go back to English. Yeah.
Okay. Rocky, talking about the data connectivity. So I think the council has done a report by the end of last year. So what is it about, and what's the result?
There hasn't been any result yet, but I noticed that the government has been working very closely with its mainland counterparts on exploring the exercise of allowing certain data to be transferred across border. And as to what our paper talked about, first, we talked about that data connectivity is very important. But then, just like the other parts of the world, there are restrictions as to what data can be transferred outside of the territory of a jurisdiction of a country, or of a region, right? And therefore, it's not very special for the mainland to restrict certain data to be transferred across the border. Now, Hong Kong being a part of China, and we have the one country, two systems in place. And therefore, we advocate for the idea that certain not so sensitive data should be allowed to be transferred outside of the mainland and be assessed in Hong Kong, and then analyze it, and that would be fantastic for not only the financial services industry but the real economy as well. So that is really what we were advocating for. The idea that we put forward to the government was that there could be white lists. That is a positive list, right? So you name what sort of data can be transferred across border, and there can also be a grey list, and these data of such a category can be permitted to transfer on a case-by-case basis. Now, why we didn't promote the idea of having a negative list approach? It's just like the other, trade negotiation taken part in the past. Negative list is only adopted after a smooth operation of such a trade arrangement between different countries and regions, and therefore that was our idea. But like I mentioned earlier, we still haven't seen significant result just yet. But then hopefully we are going to see it within this year, or if not early next year.
Okay. So we are running out of time, so we have a number of questions. Some are very interesting. Does working closer to Middle East capital drive us further away from the U.S. capital pool?
I don't think so. I think that, capital in and of itself, it's rather, boundaryless, right? If it's not because of the geopolitics. I think that Middle East capital is relevant for all parts of the world. I think everybody benefits from Middle East capital. I mean, look, SoftBank had $43 billion from Saudi. So, I mean, who are we to say that, it drives Japan away from US capital for that matter? So I think it's just the case that you make and the merit of the investment opportunities and how you approach them and how you work together with them that would be paramount. I think that there's nothing, I don't think there's much the US can do about Middle East working with China. I think they had their chance, but they're in a very strange place right now between the US and the Middle East. So it's up to them to patch that up, and they would benefit from Middle East capital as well, right? So that's my view.
I don't think it's either or. I don't think it's the bifurcation. And it's despite all the rhetoric, I think most countries are pushing back. It's not a U.S. versus China. I don't want to pick sides. It's a multipolar world. Mideast capital will be part of that. Southeast Asian capital will be part of that. Chinese capital will be part of that. European capital will be part of that. There's some sand in the machine right now, but I'm sure we'll work them out. Yeah.
Rocky.
Well, I don't think so. So, first of all, I see that in terms of the international relations landscape, I think it appears, well, perhaps, at an early stage that there could be convergence or perhaps less intense relations going forward. And with that in mind, I think, Hong Kong and China at large has really been dealing with international relations in a very pragmatic way. That is to build relations, maintain relations, nurture relations. And so, it's not for us to choose either or, as Linda mentioned, but, really whether or not the other pension funds, the other ultimate asset owners would be allowed to invest in certain parts of the world.
Mm-hmm. So, Linda, this is the questions for you. You mentioned about the Web3 in Hong Kong. So is Hong Kong moving too fast on this front?
Look, I'm not a Web3 expert. I've got colleagues at ASIFMA in the fintech space, so I really don't have a strong view on this. But in speaking with the mainland authorities, they don't have a strong view either. They're just like, Hong Kong, this is your sandbox, go and play. So really the message I've been bringing back to members and to counterparts is Hong Kong really needs to stand up. If I go to a Hong Kong exchange event, don't just conduct it in Cantonese and Putonghua, right? You're forgetting an English-speaking audience. That's ridiculous, okay? So, in any kind of venue, it should be English as the dominant language. You are an IFC. We are an IFC. Okay, let's bring that back. And don't underestimate language. Language is key. I'm having a business meeting, and all of a sudden, breaks out into all Cantonese. I understand the local sensitivities, and there is a feeling like, we're all 自己人, we're all the same people. But come on, I mean, Hong Kong is an international financial city. You need to be welcoming to people from all over the world.
Perhaps I can have a go at this. So language is very important. You know, how the command of English, command of Putonghua is very important. But the command of a computing language is also important. So the reason why Hong Kong really went for this Web3, and we want to, we don't want to be the crypto hub. We want to be the blockchain hub. And you know, FSCC is actually working on a paper in terms of how to make it more acceptable for financial institutions, not only banks, not only asset managers, but also insurance companies and the likes, to adopt blockchain technology, because it is ultimately good for the performance of financial services. You think about the origination, the trading, the track and tracing activities. Blockchain technologies can actually allow that to happen. And therefore, this is exactly why Hong Kong is trying to carry out the role as the blockchain hub or DLT hub, or however you call it, right? So we need to have the firms to be present, and have the firms to be present, then we can bring the technology and retain the technology to be here, and then the talent will be here. And I think Hong Kong being now in the leading jurisdictions where blockchain technologies is acceptable to most of the financial institutions, it is conducive to such development.
Thank you so much. So in conclusion, given all this integration effort made by the government and the private sector, so what should we anticipate? What is the best scenario? The Middle East capital come in, US capital come back? What do you think, Linda?
I think that the best scenario is for all of us, and that's everyone in this room, to kind of do our part, to stand in the middle, to bridge the gap, to say no to choosing sides. I'm a global citizen. I live in a global community, and I refuse to choose sides. So I think if we all take that stance, if we all push forward, I think we'll see things kind of go back to a more reasonable structure.
If I may add, I think Hong Kong people need to be in China and understand how to work there, and be embracing of our Shenzhen counterparts, our Shanghai counterparts, and other counterparts, where whether it's the blockchain hub or anything else, actually working with them so that we're truly one family. And if we are presenting these opportunities that are big and prosperous, the money will come. I think Hong Kong should really learn how to do, Hong Kong people should learn how to do business in Shenzhen and Shanghai, not about speaking Mandarin, but be immersed and knowing the culture and try to be one of them, and not asking people to be one of us. And by creating that bigger pie, we will attract capital, right? It's just a matter of time.
I agree. I just believe that Hong Kong being an international hub is not only about finance, it's not about the corporates being here, but also the people. And therefore, I think we should adopt an international mindset where we not only speak the language, but also understand the culture. After all, like if you were to do business with our foreign counterparts or mainland counterparts, you need to understand the culture, and then thereby you build relationship. And with that, I think Hong Kong can continue to thrive.
Thank you. I will stop here. I won't ask you about the worst case scenario. Let's hope for the best. Thanks for joining.
Thank you.